For a while, one of your key conviction calls for the first half is for inflation to recede, not to continue spiking higher. Are you still holding to that view now that we've got Russia on the brink of rolling tanks into Ukraine and oil going fairly easily to $100 a barrel? We're only but $5 away from that right now.
Yeah, absolutely. So that's a risk factor to our view. So I think the most important call that we in Asian equities have to make probably throughout this year is when inflation is peaking. If and when that happens, that will come with shifts in markets, maybe back into growth. It will probably be good for emerging markets in general as well. I think it will be good for the ASEAN markets as well, though they have a lot of things going for them, so maybe they don't have to wait necessarily for that. But that will be a very big shift in markets. Now, a lot of these interest rate increases are already priced in. So we were wondering if we're close to this. But yes, if oil prices go higher, energy prices go higher, and that leads to other increases in other kind of products as well, so maybe higher inflation expectations, it might mean that that call on peaking inflation and peaking interest rate expectations is going to be moved a little bit further into the future. It is
got to ask you in this. Harold, got to ask you, this is a pretty key question. If there is a Russian invasion of Ukraine, oil goes through the roof. For the Fed, right, which is already looking at the highest inflation in the U.S. in 40 years or so since the Reagan administration, are they still going to be squarely focused on fighting inflation, or are they going to be more worried about growth? Which is another way of asking, are they going to be deterred with this whole thing about them being behind the curve from hiking aggressively?
Yeah. Remember, the Fed is an institution that arranges money supply, and it tries to fight inflation or deal with inflation by withdrawing or increasing supply money and therefore impacting demand. And the underlying idea is that when there's a lot of demand, prices go higher up. But if there are other factors such as oil, that makes it a little bit more difficult for the Fed because they can do whatever they want, but that kind of inflation, it's not something they can control. So what they presumably have to look at really is kind of a feed-through mechanism. Does higher oil prices mean that people have higher inflation expectations in general? Does it mean that, for example, wages are rising? How does it impact kind of everything beyond oil and energy as well? And that will probably take a little bit of time for us to figure out. So in addition to that, we're already thinking that growth in the second half of this year, so as we go deeper into this calendar year, might weaken a bit in the US. Something like this could make that even worse.